Let's break it down to the very basics here today, guys. In this video, we'll talk about some of the basics that if you're just getting started in the market, you really need to get your head wrapped around and understand before you start really putting money to work into the stock market. We're talking basics today. It's actually a very common question that we get here on the show. So let's break down a few maybe terms and a few terms that we use here on the show that people need to understand a little better.
Yeah, absolutely. When you start thinking about trading in the overall stock market here, a few things to understand. Like one, we're going to talk about equity trading first off the bat. I mean, I was already talking about AMC earlier, so I can just leave us right here. So you know, when a company is public and lists on a particular exchange, in this case, it happens to be the New York or the NASDAQ, what you're essentially doing is you're speculating on price action, right? So if you believe the price of AMC is going to go up, you can buy actual equity in the company. I'll go to a daily, so it just makes a little bit more sense. And then you can sell it at a later date, right? So a couple of things that you have to understand in terms of how these are traded. Almost every single listing in the NYSE, when it's listed, is going to look exactly like this on a level 2. You're going to have the bid and the ask. And this is something called the national best bid and offer at the very top here. So this will tell you that at the current moment, this is the price, the best price that someone is willing to pay, and they're waiting to buy shares of AMC at that price. And the same thing with the offer. Someone is actively, these are the best prices someone is actively willing to sell at, $32, $52. So you can see it moving around, 53. So if I wanted to buy shares immediately in AMC, all I would have to do is be willing to pay this offer price. Someone is willing to sell at that price. As long as I put an order in that is at or above this price, I should get an instant fill. If I want to wait for my particular price, let's say I only want to own shares of AMC at $30. So I would enter through my broker $30, and my bid would then be sitting somewhere in the book, you know, way down here. I'd have to scroll down, and you'd be sitting waiting for $30. So when we're actively trading, we are always watching the actual price action. Now the difference between this and when you're looking at a chart is the chart is going to show you the past fills graphically, right? So this is where the stock has traded today. These are all of the bars of where the actual trade has occurred. Whereas when you look at this level 2, it's telling you where people's orders are waiting to be filled and accessible in the market. And so it's an important distinction because a lot of people, their gateway to the market is looking at a chart and understanding price action. And that is the past, right? We're going to get the actual bid and offer here, and we're going to always want to see the tape, which I always have next to it, which shows you the actual fills coming in real time. So it's an important thing to look at for those of you that are active traders out here. You know, if you're not familiar with the level 2 or looking at a level 2 at a time in sales, it is one thing to just spend lots of time looking at. I'll do you one more, and a shameless plug here for Day Trade the World. One of the things we also have available in our wiki, it's a day trading wiki that anybody can look at, is we have market guides, which give you an idea of order types, right? So like I said, if I wanted to wait at a specific price, I can put a limit order in. Understand the difference between that and a market order. Every broker is always going to have market orders, which basically is allowing me to say, I'm willing to buy up to infinity, therefore always removing from that offer. I'm willing to sell down to 0 as a market order, meaning I'm always willing to sell to that bid. So just some basics about how every equity market here in the US works.
Okay, I mean, this is going to be a little bit silly for those of you that do have some experience, but I mean, realistically, some of the terminologies that Neil and I always use and that you may hear for the first time is really just a long versus short. Like I want to talk about that, and I just want to use some examples here real quickly. Today, you know, long means to buy a stock. So if you really feel like, hey, I want to get into a name, or I've read good news about, here, this is, for example, this is SoFi. I've read good news about SoFi, or we'll switch it over to Apple here. You know what, I really like Apple's movement. It's been a good one. And you say to somebody, I want to go long Apple, or I'm here Neil saying long this name or short that name. We'll deal with shorts in a minute. But long is to own something. So what you have to do in this situation is put money into your account. So whoever your broker's with, you'd put in $1,000, and in this situation, you'd be able to buy, you know, stock is, let's say this is $200, you'd be able to buy 5 shares. Same thing, you'd be able to buy 5 shares right now of Apple. And so you'd put in your buy order, and I'm going to talk about that in a minute, to go long shares. So when you see on the bottom of our screen, sometimes if we're trading or if you're with friends and you say I'm long something, it means I currently own that. I feel like the stock is going to go up. And on the other side of it, of course, it's a short. And what that means is I feel that there's something negative coming, and what I want to do is I want to borrow the shares because I don't own them, and I'm going to sell them in the open market and buy them back for a lower price. So when someone says I'm short DraftKings here, it's because they believe the price of DraftKings, and I'm wrong, the price of DraftKings is going to go down. So when I'm shorting here, like right off the open, 31.20, and then buying it back at 30.90 here, I've just made that 30 cents because I borrow the shares from the open market. So someone right here is willing to buy 18s. I will sell them that 18, borrow the shares, and buy them back for lower. So that's long versus short. And I just want to quickly, you have to know your keys. So I just want to say that this is another tip for those beginning traders. Understand before you even start trading. And I know this might be hard to see because it's white on white, the background. Well, I guess it's okay once you blow it up, but I'm just going to go easy here. NASDAQ, and I have and this is a little bit of a complicated system, but I have all my buy keys sit on the right side of my keyboard and all my sell keys on the left side. So my tip really is for beginning traders here is to understand how to execute. Because Neil, myself, even today, we still make what we call keystroke errors. Yep. And that is that you mean to go long, but it's an accidental keystroke where you go short. So I think understanding the terminology and understanding where to find those buttons and how to push those buttons, very, very important for learning how to trade.
A couple of great points and a couple of great facts to leave you with. I feel like we could talk about this topic for hours and hours and hours. Maybe we have to break this into a bit of a series, guys. I was also going to mention auction market theory. There's a lot of great content on the internet regarding auction market theory. That was one thing that really helped me kind of wrap my head around exactly what was happening on a day-to-day basis in the market. Go out, Google auction market theory. There's lots of great content out there, but hope that helps, guys, on some stock market basics.